Hey, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond over the Contrarian Trader, and what we're going to talk about today are some macro charts which will help to explain why President Trump and Jay Powell are doing what they're doing. Either they're doing a good cop, bad cop type of role play, or Jay Powell is not getting the macro picture. He's acting as an academic rather than a true banker, appreciating the macroeconomics which affect the overall stock market. And to that point, it's not necessarily his obligation to support the stock market. So let's make that being known. But in today's political environment, with most people, working people, having money invested somehow, some way, either through IRA or 401k in the stock market is, in fact, de facto, the economy. So the other day, Jay Powell came out and he cut rates by a quarter percentage point, ended the roll-off of bonds off of the Fed's balance sheet, which is net an additional rate cut, but the markets kind of shrugged that off. And the president certainly wasn't happy. Why wasn't the president happy? I'm going to talk to you about that in 3 charts. The first one is this one. Now, this first chart is a quarterly chart, Dow Jones Industrial Average, going back 100 years. And before I get into this chart, you may be saying, what's the deal? What relevance does this have to where we are today? The relevance is this, is that when I am asked what differentiates me from other traders, it's this. I love technical analysis, as many other traders do. However, in school, I was not a good student. I was a horrible student with the exception of 3 classes. 1, statistics. 2, history. I was top tier in history. It's because I had an interest in it. And I believe that history may not repeat itself, but it certainly does rhyme. And lastly, I did very, very well in the humanities, which is the arts, learning about other cultures. And I'm technically a conservative. I'm not supposed to be interested in that, but I am. And I'll attribute that to my being very, very open-minded to other ideas. So when you mix those 3 together, I believe that it has certainly helped me with my trading. I don't have as much crazy conviction towards one side of a trade. I want to know all differing opinions, and I accept them, embrace them. I may not agree with them, but I will file them away for future reference. So back to this quarterly chart. Overlaid here, I have the 30-year bond going back to 1975 when it first was recorded, at least on this chart. And this is the bond yield, not the price of the bond. And this is the Dow Jones Industrial Average in candlestick. And I'm going to drill down to a 20-year view, 30-year view in a moment, so you get a better picture of where we're at right now. The reason why I have this higher level view chart up here is to illustrate that clearly, had you been long of this market going back 100 years, you would be very, very well off despite the peaks and valleys. And I don't expect that to change anytime soon. But what I want to do right now is pull up for you, and we're going to drill down. I want to pull up for you one of the reasons why I believe that the president is well aware of the fact that the Federal Reserve must cut rates. They must go back to QE, and QE in particular, because the Federal Reserve with rate cuts only influences short-term yields. Now, the rolling off of debt off of their balance sheet, that influences longer-term yields. And they have stopped doing that. But it's not going to be enough because those rates on the longer end of the curve are going to have to come down. Now what I want to do is I want to point out to you are some concerns that I have about this chart. And then we're going to drill down, I promise. As a matter of fact, we can drill down now, but I want to point out one thing. The peak of the 30-year bond yield was reached in Q3 1981. And not so coincidentally, that's when this current bull market began. And when I say bull market, I mean a secular bull market, not a cyclical bull market. We've had many cyclical bull markets over the past 30-odd years. But take a look at what happens when the 30-year bond rises. October 1999. What happened only a few months later? The dot-com crisis. What happened to the stock market? Recession. Then fast forward here, as we did a double bottom off the lower band of support and yields began to rise back in Q2 2007, the financial crisis. Now fast forward to present day. Present day began back here in Q1 2017 when we broke out above the upper band of resistance out of this declining downtrend channel. Now, this is a quarterly chart. It's going to take a few quarters for things to develop. But at current, what you're seeing is a retest of that support. We began to rally into Q3 2018, and we are now pulling back yet again. What the president understands is that this is all coming to an end. What the president understands, we're going to drill down now. We'll go with a 30-year view. What the president understands is that this uptrend, while extended, can move higher, but only with the helping hand of the bond market. But there are problems. Take a look at RSI. We double topped. Now we're putting in lower highs. Stokes still look good. We have momentum still at the back of this market, but it is waning. Ultimate oscillator, lower highs. We peaked out back here in Q4 2017. MACD, very, very extended. The histogram, which is what I really pay attention to, is trending downward. Now, there is still time to salvage this quarter. Two months to go. And if I take off the log scale view, this is the reality of the market. Very, very extended, showing lots of topping action. We have attempted to break out to new highs in Q3, but at current we are being rejected. And if you take a look at the pre-market activity, we are weak and getting weaker. Now, to further add to what the president understands, and Jay Powell may not, is that the yield curve, and I use 2s versus 10s, once they go inverted, in all probability, we are in recession. What happened immediately following the Federal Reserve announcement on Wednesday? We were above this upper band of resistance on a monthly chart. By the end of the day, on the 31st of July, we had closed out the month below this lower band of support. In short, this bear flag formation or dead cat bounce on the yield curve failed. Now, where is their hope? Where is their hope? There are glimmers of hope in this economy. The Dow Jones Trucking Index. You would never know it by the headlines prepared by Business Insider, which is owned or edited by Henry Blodgett. Henry Blodgett had to pay a $4 million fine for his participation in the dot-com fiasco and was barred from the securities industry. Henry Blodgett put out an article. He didn't write it, but he certainly approved it. Being the editor of Business Insider, one would assume that, and former owner. Henry Blodgett put out an article that trucking companies were seeing a bloodbath. I shared this with members the other day. However, when you take a look at the charts, we were actually breaking out. We broke out in the month of July above this upper band of resistance on the Dow Jones Trucking Index. And when you take a look at the transports, the Dow transports, they were very close to a breakout. This is a very bullish setup for the Dow transports. So while the futures are down this morning, not reacting well to the trade tensions with China and the president's decision to raise tariffs, And while the Dow Jones Industrial Average and the remainder of the stock market remains at very elevated levels and is extremely long in the tooth, and Fed Chair Powell's statement of a mid-cycle adjustment. Think about that statement. A mid-cycle adjustment. Let's go back to a 100-year view. Does this chart here, does this indicate to you that we are in the middle of a cycle, or are we long in the tooth? Frankly, what I think is going to happen here, I think the markets are going to shrug off the trade war tariffs. We are going to get more rate cuts. I don't agree that that's the right thing to do from an economic standpoint, but from a stock market standpoint, the president's got no choice, because unfortunately, that is the economy is viewed by the voter. And this sell-off, when it happens, folks, I mean, this is the financial crisis. Look at how extended we were here relative to where we are at current. This is going to be the mother of all bubbles. Now remember, this is a quarterly chart, and it could easily get us through the 2020 elections. But after that, I fear for what is coming. Let's get to the pre-market activity. Okay, let's begin with the S&P futures. We are down about 0.41%, 12 points. But we are rallying off the lows. I don't believe, again, folks, I don't believe that the China trade wars are going to knock this rally off of its pedestal. I think that we are going to rebound, perhaps not today, but in the subsequent weeks. What the traders are doing right now is that they're rationalizing which is best, to have a favorable Federal Reserve or to have a trade deal with China. Well, any trade deal with China prior to the 2020 elections, because they want Trump out. So they don't want a trade deal. So any deal signed before 2020 is probably going to be a bad deal. I'll go with the Fed rate cuts for now. After 2020, all bets are off the table. So I think that we are probably going to rebound off the lows of the session. Do we close positive on the day? I wouldn't be surprised. This could be a washout of week longs. And don't take that as an insult, because we were stopped out of our banking trade yesterday. So when I say week longs, I mean those who are overly long of this market, who probably received margin calls and had to liquidate positions, rather than those who were disciplined, began accumulating a position on a strong chart setup and were subsequently stopped out. I approve of that type of trading. Losses are part of our businesses. I took a loss yesterday. However, we far more made it up on our gold mining position using the NUGT. So it looks as though we're going to rally off the lows here. Do we close positive? Not quite sure, but I wouldn't be surprised. Let's take a look at the NASDAQ. The NASDAQ, a very similar chart. We're down more on a percentage basis relative to the S&P futures, but a very similar looking chart. And both of these charts, I drew a line on the S&P. Let's go back to the S&P for a second. What I should have pointed out, the reason why I drew this line is that we're seeing higher lows on the S&P futures RSI. Now taking a look at the US dollar, it's getting absolutely annihilated, which is exactly what the president wants. And I think that if we break support here and we drop back down into this trading range, I think that the markets will begin to take off. Why? It's because manufacturing in the United States is under a lot of pressure. Why is it under pressure? It's because we have a strong US dollar. It makes our goods more expensive overseas. And a weaker US dollar makes them more affordable, and it helps exports. It helps the trade deficit. So the president knows this, and he wants a weaker US dollar. So the dollar under a tremendous amount of pressure. Let's take a look at bond yields. Actually, the bond price, the 10-year Treasury bond, very extended here. We will probably get a pullback and a rise in yields, at least for today. But at current, we are up on the session. But you can see that we're peaking out here a little bit. Now taking a look at crude oil. Crude has bounced off of its lows, a dead cat bounce. Do we break out and move higher? I don't know. I'm not that smart. What I would be looking for is a recapture of this prior support level And that will tell me whether or not we have the strength to see oil hold and then move higher. If you see the dollar weaken up here, bet that oil will rally as well. Remember the chart of the trucking index. There are signs of life in the transport sector, in the trucking sector. So what does that mean? It means there must be some support in manufacturing. They need to be shipping something. And that something, whether made domestically or abroad, requires energy. So we should be seeing fuel, pardon the pun, in the price of oil. I was going to say not intended, but you know what? It was intended. I want to come off smart. Let's take a look at gold. Gold is up over a percentage point today. We are pulling back off the highs, but man, what a rally yesterday. Incredible. An outside reversal day on a daily chart. I went over this with members last night on Market Wrap. Let's take a look at Bitcoin. Bitcoin measurably back above the 10,000 mark. So Bitcoin looking good. And that is it for this morning, folks. I will be putting out best stock charts for the coming week. If you'd like to support my work, become a member of the Contrarian Trader. Sign up for your 14-day free trial offer. Everybody have a profitable trading day, and I will talk to you soon. Be well.